Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia and brought to you from their offices in Kuala Lumpur. Today we welcome Jeffrey Halley, Senior Market Analyst Asia Pacific at OANDA. Now, Jeff, as always, great to have you on the show.
Yeah, wonderful, mate. I'm feeling a bit scruffy when I see you all dressed up in that hipster background today. It looks wonderful there.
Yes, actually. So it looks like it feels and looks like a tech company, but it's actually a bank, believe it or not.
And they have a pool table.
They have a pool table. They have PlayStation. It's really a breakout section. This section is really for the employees to kind of chill out and brainstorm and stuff when they're not working.
That's wonderful. I'm sending them my CV today.
Now, let's get on to markets. And first of all, we take a look at crypto markets. Now, Bitcoin is at 40,611. It's up 3.72%. Ethereum is at 3,009.33. It's up 5.05%. Now, looking across to regional stock markets, we start with the SGX. It's at 3,333.24. It's down 0.19%. Now, looking across to the KLSC, it's at 1,595.42. It's up 0.34%. Shanghai is at 2,952.61. It's up 0.82%. The ASX All Ordinaries is down sharply. It's at 7,619.4. It's down 1.92%. The Nikkei is at 26,760. It's up 0.64%. The Hang Seng is at 20,237.5. It's up 1.89%. And rounding up the numbers is the Kospi, which is at 2,670.64. It's up 0.54%. Now, Jeff, what's your view on what's happening in markets today, especially that number on the ASX?
Yeah, well, Australia and New Zealand were on holiday yesterday, so markets there today are playing catch up to that massive sell-off we saw sweeping the world yesterday, and that's why those markets are lower today. We shouldn't read too much into any geographically specific information from that part of the world. Look, we saw a modest, very modest relief rally last night in New York after Elon Musk. It was announced that Twitter would be acquired by Elon Musk. We saw that flow through into Asia today, but actually Chinese markets, mainland markets, started the day lower, and we've seen this mysterious appearing out of nowhere rally by Chinese stock markets today, and that comes against a background where the government has announced that they will test everybody in Beijing now for COVID-19, not just those sectors of the city that set this sell-off yesterday. I'm thinking that this relief rally we're seeing in Asia today is very much an artificial construct, and that we've seen China's national team in doing smoothing operations. They often do come in to buy stocks when the markets get a bit tasty. And I'm taking the whole rally today with a grain of salt because I think it's been artificially constructed.
Okay, now, Jeff, I want to move then to Wall Street. We've got about over 160 companies coming out with earnings, especially the big tech names, your Apples, your Microsofts, and so forth. What are the expectations of markets for earnings this time around?
Earnings has been pretty good so far, actually, but certainly is a crowd pleaser week with lots and lots of heavyweights announcing. But I think despite the fact that we had this huge number of large companies announcing results this week, all eyes will be on the technology space and the FANG stocks, if you want to call them that. Microsoft and Alphabet announced today. I think they'll both have quite strong results. I think all the big tech companies, perhaps except Meta, will. What will be very interesting to see is what their outlook is for the rest of the year. So we're in a Fed speaker blackout now ahead of the FOMC next week. So we're not going to get any hawkish comments from any Federal Reserve talking heads. That'll leave the markets to concentrate on the big tech stocks. So I'd still see the potential for some relief rallies in equities and perhaps a correction lower in the dollar if these big tech results come in reasonably strong and they're not too negative in their outlooks. Whether that carries through to the FOMC next week, I'm not sure, but certainly I think in the absence of Fed speakers, we do have that potential if those results are strong.
Now, Jeff, there is a school of thought, and there are quite a number of us out there that think that perhaps markets are oversold on all the bad news, whether it's geopolitical, whether it's interest rates, whether it's stagflation. What's your view on this?
No, I think they're all incorrect. I'm sorry. Look, the Russia-Ukraine war isn't going away. If it stops next week and they sign a treaty, Russia will be excluded still from world markets for years to come. We've moved back to a Cold War setting of the 1990s there. We're still going to have food inflation. Look, the market has consistently underpriced Federal Reserve rate hiking requirements and expectations. And to be fair, the Federal Reserve has made a complete hash of it itself. It was still in transitory inflation mode as late as December. So we are taking we're taking a perilous view, assuming that that the worst of the bad news is already priced into markets. It's only going to take one big negative headline out of Beijing regarding the Omicron outbreaks to get us back to where we were yesterday morning. So I think the risks are definitely skewed to the downside as markets have caught between a China growth pincer movement with Federal Reserve rate hiking expectations.
Now, Jeff, as always, thank you very much for speaking to us and coming on the show.
Always a pleasure, and enjoy the rest of your day.
Thank you. We've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thank you very much for tuning in.